HR tech, work tech, and investment are transforming the future of work. Are you in the know? Welcome to the WorkTech podcast. Join host George LaRocque for expert insights on the trends, M&A activity, and strategies shaping the workplace. Brought to you by oneworktech.com and the Work Defined Podcast Network.
I'm going to walk through sort of a rapid fire. It's always rapid fire here. A lot of data, a lot of insights, a lot of in the market to talk about. But you're definitely going to get my take as well as what the numbers are bearing. So I'm just going to jump right into it. Please use the chat for any questions, comments, what have you. And I'll keep my eye there. I'll try to save some time at the end to also address anything that's come up there. But let's go ahead and start looking at the results. So Q1 was a bit of a surprise for me, like almost everything is in this market, not in a bad way, which is good. So $1.24 billion over 58 deals. It was more than 2 times what we saw in Q4 of 2024, and just a 20% year-over-year increase, as you know, as you've seen in the report. That broke down. I think the most interesting view is when we start to look at the categories and how things played out there. So looking at I'd say the biggest positive, one of the biggest positive things that happened in Q1 was talent acquisition coming back. Talent acquisition and HCM. If you go back over the years since that I've been doing this, this is pretty much what this chart looks like when we look at the high level categories: human capital management, talent acquisition, talent management. Sort of like this. There are quarters where talent acquisition edges up close to HCM, a few quarters where it surpassed it. But it's usually, these are the two categories, it looks like this. Last year, talent acquisition just fell off the chart, and HCM and at times some talent management was really pulling the category forward as far as growth capital coming into the space. As far as what's included here, it's, every stage of venture capital and private equity investment, if you will. So talent acquisition coming back was very interesting. When we look at the average deal sizes, this is also in HCM looking at a $27 million average deal size versus roughly, let's say 17.5 in talent acquisition and talent management. Very consistent, sort of difference between, what we're used to seeing. Human capital just attracts, I think, more, bigger, more later stage opportunities. Investors really understand. You've heard me say this before if you've attended this. Investors really understand what they view as a necessity, right? To pay, to provide benefits, to augment benefits, even elective benefits, the whole HCM category. Investors can get their head around that. It's a little more difficult for investors to look at talent acquisition and not get skittish based on what's happening in the job market or the economy. It's also a little similar for talent management. Most investors are not steeped in our category, so that's something to keep in mind. And I think that's also an opportunity for investors who do invest either in advisory or experience within the category. And we'll talk about what WorkTech's trying to do there a little later as well. Taking it down another level to subcategory investment, this is really where, if you're focused on WorkTech and HRTech, you get a sense of where the money's really going. And you can see that HR suites and platforms, rewards, benefits, wellness, these are all core HCM categories. Workflow automation is something that we added to the report because we're seeing really foundational AI that is really focused on automating workflows independent of categories themselves. I'm not going to drill in on a lot of that today. These are fewer numbers of larger deals, if you will. But if anybody's interested, I'm happy to take an email or drop it in the chat, and I'll give you the details on those. And they're called out in the report itself. The big news here was marketplaces coming back. So today, when we've been tracking this for 8 years, believe it or not, now at a detailed fashion, the number one subcategory or category for investment globally is marketplace job boards. It's another model that I think investors love because you've got two-sided or even more sides to a marketplace, depending on if we're looking at skills or these days helping candidates with their preparedness for the job market. So this came back. It had fallen off out of the top 10 throughout last year, throughout 2024. So for it to come back and make its way to one of the top two, so where we're used to seeing it, was something to take note of. Okay, so let's keep going through before we get into some more qualitative sort of analysis. There we go. I'm clicking on the wrong monitor. All right. So when we look at the deals by stage, in the pre-seed and seed, it was a very healthy showing, which was also good. That's the hardest, I think, time to raise funds is, getting to market fit, understanding who your customer is, getting to that ideal customer profile, et cetera. So the average deal, we'll look at that in a minute, was about 4.1 million in the pre-seed and seed. It's a good, healthy number that I was really encouraged to see, that we had, close to 25, 30 deals in that, I think 32 to be specific, in that early stage. The rest of the chart looks pretty much what you would expect. A lot of folks will include A rounds in early stage technically. Whether you do or don't, these sort of numbers from a deal volume perspective look, just got fewer deals, in later stages. We normally see a few more C round deals, but I never jump out looking at one quarter and being reactionary. There are certain things like the reemergence of talent acquisition or job boards that are notable, but one quarter does not a trend make when it comes to this type of data. So let's take a look into the average deal sizes by round. So you can see that 4.12 in pre-seed and seed. You can see how it played out. Private equity, there wasn't a ton in Q1. That number is usually a little higher, and again, that C stage is normally a little higher. But again, I'm not reacting to this as much as just taking a note as we march through the rest of the quarters here. All right, so moving quickly, and all of this data is available in the report. If you go to oneworktech.com, if you haven't seen the report already, you'll definitely get a lot more detail, a lot more drill down there. Okay, so let me get into current market conditions. So here's a little more qualitative view. This is true everywhere that I go. Everything's taking longer right now. It's not taking as long, to raise a fund, deploy a fund, or raise money as a startup or a scale up or growth stage player for some than others, right? Buyers are continuing to buy, funds are raising and deploying, but it's this market, this economy, the impact, while I can say that, from a buying or selling and buying perspective, deals are taking longer. There are also categories, and we'll get into some of that in a moment, where things are going like gangbusters. So it's what I like to say is everybody's hair is on fire when I get on a call, an advisory call, whether it's with someone on the HR side or somebody on the vendor side, but their hair's on fire for different reasons. It could be that they're so swamped and so busy and growing so much that they're overwhelmed. It could be that they're, plugging holes in the dam and, trying to sustain through a very challenging time. So I think that's important to understand that this is maybe more lumpy is a term that I've heard a lot. It varies by market segment, by vertical industry, by category, function, geography, and results vary as well. So, we're still seeing all of the buyers buying. It's just that at enterprise level, buying cycles are stretching out to 18, 24 months in some cases. In other more urgent strategic cases, we're seeing, 6-month sales cycles, buying cycles. We're seeing funds, very large funds being raised by venture capitalists in the space, focused on this space and still looking to deploy. I'm getting more calls looking for deal flow, looking for data about what's happening in the market than at any point in the last, 5 years. So it's a very confusing time for all of us. But this is sort of, the overwhelming theme is that things are taking a little longer. And I'm not sure that won't be the case for some time. Okay. We're doing well on time. I'm going to shift gears into a activity now. Here are I wanted to point out there are a number of transactions, and I really looked over a 6-month window to sort of call out some of these moves, and I selected them strategically because as we get into trends and what's happening moving forward, you'll see how these align with some of what I'll be talking about. The ServiceNow acquisition of Moveworks. So ServiceNow, I view them as an experience layer. Moveworks is a sort of foundational AI agentic layer. This was a very smart move for ServiceNow. ServiceNow is not solely focused on HR, but they have a huge focus there, or substantial focus there. I think this sort of foundational move by platform players that are not solely focused on HR, but will have an impact on HR based on, especially in the large enterprise segment, where we have IT yielding a lot of influence over the direction for security, data privacy, etc. How we're implementing AI and agents matters. This acquisition will have an impact on some of the incumbents in the HR space. And we're seeing the existing platforms, they're not reacting to ServiceNow, but they're rolling out their own AI agentic models and products. So this is something that this move, I think we're going to see more of this sort of folks that have one foot in our market and the other foot sort of in adjacent markets, taking more of a enterprise-wide stance will start to help the enterprise become more, consistent and secure, but muddy the waters a little bit for those that are just focused on this space. Okay, Intuit and GoCo. This acquisition is nothing that I did backflips over, but Intuit being a large player, especially in the SMB with Quicken, and they've got, I believe they own MailChimp. They've got a broad suite. This wasn't their first move into core HR or payroll. They've been in the payroll space since like 2007. So this was a very interesting move, but I want to underscore again, that sort of, this is more of an adjacent player who is focused on pay, right? So I've talked to Intuit and or some players at Intuit, and I would say informally, what I've heard anecdotally, let's put it that way, is that, they're really focused on pay. They're really focused on sort of thinking about pay in a broader term. And we'll get into that, what that might look like in our space as we get into some of the trends. And when I say pay, I'm not just talking about payroll. Again, put a pin in that. We'll come back to that concept. But look for more adjacent players to start to reach into the HCM, talent acquisition, talent management space to address the market segments that they're focused on. Okay, another interesting transaction. It can't really have this conversation right now without talking about Paychex and Paycor. This move, not only will it mean ultimately there are fewer pays, but it speaks to extending from the SMB, where Paychex was really strong, into more of the middle, where Paycor was really strong. Plenty of overlap, but a lot of that is sort of good overlap as we look forward and think about what Paycor's been doing with AI, how Paychex has been thinking about AI, and it's going to help Paychex ultimately move up market. And another move to think about, a player who, if you zoom out from Paychex and you go back over the last 10 years, they've really consolidated onto one platform at Paychex, which enabled them to extend their platform and enabled them to build out a partner ecosystem with companies that we wouldn't normally include with Paychex, right? The Find'em partnership that you'll see advertised on your cable TV network. They were already heading up market, and via scale to the SMB, leveraging a tool like Find'em that you would normally expect to see in the high growth middle market player or large enterprise, really get some play within the SMB, because the talent issues are just as acute there as they are in every other segment in the market. And Paycor is a very logical next step in that direction. So the reason I think this transaction is interesting, of course, for what it does for Paychex, but also if you think about this move and what similar moves may be in process right now across the WorkTech and HRTech landscape. Another acquisition not a lot of folks were talking about, and it is an acquisition, it's a quasi investment, but BPEA is private equity. They acquired PageUp. PageUp was probably one of the, I wouldn't say they were a secret, but I want to say best kept secret. PageUp grew north of 100 million in recurring revenue with a very, very tight strategy, going where they could win in region, in country, so North America, Europe, EMEA, APAC, etc., with the brand, with the product, with the marketing and sales, where they could take deals from incumbents or bolt in to a larger platform play. PageUp in APAC is more of a talent management full suite and platform, including talent acquisition. I think with now what I'm seeing optically here is they've brought in a number of new executives across the C-suite. They've kept a few as well. And I think you're going to see a go-to-market here. This is my hunch, that is more aggressive now that they've sort of established their scale and some of their launchpad into some regions where you might be viewing, sort of in the US, we would think of Clinch from a recruitment marketing perspective, not really the PageUp platform. I think that's going to change. I think a lot of vendors are going to get woken up. A lot of buyers are going to get woken up as to what PageUp brings to the table. None of these shops are clients. I don't have any inside baseball here from anyone, just information through briefings and understanding. So I'm not, not sharing any tea leaves that outside of the norm. So those were the interesting deals. Now, what's actually happening in the market? So this has been true for about 18, 24 months. Everyone wants to talk about or ask about multiples. It comes up repeatedly. And this 5 to 7x on revenue as the median. So some will see larger, some will see smaller, but the median for top performers as I look across all of my relationships with the bankers that I talk to, those are investment bankers, the other advisors in the space, and then anecdotally, sort of deal by deal, that's sort of that's been holding true, and I haven't had anyone question that. Now there are strategic deals again that may see something greater, but that's pretty much the number. There's not a lot more to say about multiples at this point, but again, a lot of insights and maybe some things I can't say here, but I'm happy to take on a call in another conversation. So that's sort of what we're seeing. Okay, I'm gonna take a breath, check the time. We're doing okay. Let's talk about the trends. I break down the trends into two spaces: tech and category and function, right? So I think there are a lot of things happening right now because of the emergence of AI and what's happening around the technical trends. But then there are a lot of things happening that are driven by the product category or the function within HR, or TA, or TM, et cetera. So let's take a closer look. This is probably hard for you to read at the tech. So agentic, enough said, right? There's so much written about this, so much, we talk about this all the time. I'm sorry to put it on top. I just wanted to sort of get past it. But the only thing I would add on agentic is I'm seeing very few autonomous agents. I'm seeing a lot of LLMs with automation. I'm not an AI expert. I just know how to read a definition and understand what I'm looking at. And so, but we're headed here. This is moving very quickly. I'm really excited about some of what I've been shown sort of under NDA on product roadmap and sort of in the beta with existing clients these days. And most of the startups that I'm seeing at all stages are really leveraging agentic. So that sort of sets the foundation for the rest of the conversation, because this requires data. So integration tends to get oversimplified. It's still super important to have access to data. And I'm still seeing a lot of integration slides that are, we can integrate with any HCM, or we can integrate with any payroll provider. We can integrate with any ATS, any talent management or learning suite. And that's just, working with sort of some of the generic sort of marketplaces for integration is a good thing. It gets you a very sort of foundational ground floor integration with some data moving back and forth. But to do anything at scale, it requires a lot more bespoke development and integration. So in the future, at some point, agent to agent, sort of integration via agents or sort of data being shared, in that way may become something that's more prevalent. It's being discussed a lot today, but not being, we don't have a lot of use cases in our category. One of the big things that just continues to be underscored is what I'm calling the platform shift. The platform shift does not mean that platforms will be shifting away or out of the market, but their role in the HR tech stack is changing. They're all very aware of it. They're all building around that shift, and platforms are doing in all categories, are doing everything they can to remain attached with their customers. So if you think about the platform as the system of record, to simplify this platform shift, think about the system of record moving even further into the back office, with the experience becoming more conversational and more agentic, with think about the life cycle from an external candidate to an internal employee, from the front office to the back office. This doesn't mean that the platforms will be moving to the back office and everything's going to happen with point solutions. The platforms are driving just as rapidly as, or as aggressively as, the startups and the point solutions. And we're sort of in a race. And nobody does everything incredibly well, but this is really, we're starting to, when I move into the next bullet, sort of a point solution reckoning. If what your product is doing is providing sort of table stakes, large language model based conversational features like, rewriting documents or sending messages or analyzing data, the platforms have all either released this or are releasing it and going even further with their agentic solutions. So we're going to see this first wave of point solutions that have launched in this sort of conversational generative AI, the last 2.5 years, 3 years. We're going to see a reckoning for a lot of those. Look at it this way, if you are doing something operational for an HR professional or a recruiter, you're probably at risk. You need to be automating, and the solutions that you're buying and implementing, or in my opinion, investing in, this is not financial advice, need to be looking at enabling the organization. So yes, handling some of that transactional stuff for the individual recruiter, HR professional in the back office, but at the same time, enabling and automating in the line for the candidates, the employees, the managers across the lifecycle. I'll get into this a little bit more in a moment. So let's look at the category and function-based trends. So frontline is something that I am seeing emerging across all categories. So frontline, as normally discussed in the context of, as far as the adoption and where all of the activity has been in the context of high volume hiring. But frontline is now the focus, everything across all categories. So the experience with HCM platforms, the employee experience, productivity, performance management, learning, this is being rethought across all categories. Manager enablement, I was just speaking to this. This is something that I think delivers more value to the organization and delivers, this has always been sort of the holy grail for HR tech and work tech globally. And I'm really excited about what I'm seeing right now as far as capabilities. Yes, enhanced and augmented via AI, but in the line via this wave that we've been riding for a few years now, and the direction that we seem to be taking. Another big trend to call out, this is driven by the buyers, and I think the investors in the space are also focused here. One experience is greater than one platform. So what that means when we think about this emergence of looking at one workforce, not sort of putting my front line in a bucket with tech tools over here and my back office and knowledge workers in a different one. But it's not about getting everybody onto one platform that doesn't support those different constituencies well. It's about delivering one experience, and we're reimagining that experience based on the new interfaces that we have in front of us. So I'm super excited about this. And this is really what's driving the platform shift. We used to talk about buyers having one throat to choke, having one contract, one SLA, and filling gaps with point solutions. But now we're talking about one integrated experience. The customer doesn't really care, what those moving parts are if it's seamless and it's one experience across my external or internal audience, if you will. So that, conversational agentic for the front office and the back office, this has been coming for some time. And a lot of the use cases that we've been able to establish by leveraging mobile first, agentic, and conversational interfaces are now being reimagined across all of the other use cases, if you will, front office and back office. Okay, so still pretty good on time. I'm going to keep this moving and look at the early Q2 results. So this is through April of this year. And what's really interesting is, whoops, there I am clicking on the wrong. We're on pace with Q1 through April, and there have been deals. I just haven't scrubbed them yet to add them, but we're looking at approaching 500 million through April, which puts us at a 1.5 million run rate. We did 1.24 in Q1. It should be noted that a lot of these deals have been in the works for months, but that's always the case. And it should also be noted that this economy has been questionable. Words like hesitancy have been used to describe this market for quite some time. So this is a global view. This is not a North American view. The US, I think in this is about 55%. So again, 1 month does, if a quarter doesn't a trend make, neither does a month in this sort of with this view. And this is not unusual to see one category jump out ahead. I wouldn't read anything into this other than the overall pace. I am very curious to see where this goes. It hasn't, as we were in early May, anecdotally, I haven't seen things back off just yet. And as we noticed in the recent jobs report, there's a detachment between some of the macro and economic issues and the jobs report in North America, which tends to be a bellwether for how we perform here. Again, funds are being funded, capital is being deployed. There are plenty, I'm working with plenty of startups getting them in front of investors. So this is sort of early, this is what we're seeing. So expecting more of the same. Okay, so that is the early result. I just want to make sure I'm not getting any questions here. Okay. All right. Let's get into predictions and expectations. I'm sure this might get some folks thinking. So on the prediction and expectation front, I fully expect the market consolidation that hasn't happened to date to finally surge in 2025. Why do I think about this? Why do I think that's the case? There were 993 transactions that we tracked from June of 2019 to June of 2022. Why is that important? That was the VC frenzy in HRTech and WorkTech. So a lot of valuations were blown up. A lot of companies that raised money in that time frame, from a valuation perspective, what we call upside down when it comes to they're not having the ability to have grown to substantiate that investment. So their revenue isn't there. And many of those shops have been able to, something that's prolonged this is they've extended whatever round they last had. If they were at A, they've done an A plus. If they were at seed, they've done a C plus, in some cases even more. But that window is closing. Another window that's closing is that first wave of Gen AI window that I talked about earlier. That's also closing. So we have some earlier stage startups that raise some incredible amounts of funds and starting to look both upside down from a valuation perspective, but if they're, again, strictly providing features that are like ChatGPT within an HR interface, that window's closing now as well. Platforms are extending their reach into other categories and filling gaps within the categories that they're in. Again, thinking about those interesting deals that I had shown you, adjacent players are making moves in the market. Consolidation, I think, is going to be happening in a big way in 2025. High volume hiring is going to, I think, start a lot of these moves. I think in the next, 90 days, we are going to see some players, not just in the talent acquisition space, but outside of that space, make some really interesting moves via acquisition and otherwise in this space. And once the first one falls, we're going to see a lot of other deals happen because there are only so many chess pieces to move in that space, players that have scale. I've been spending a lot of time there, and I, keep an eye on that space. Marketplaces being greater than job boards, it's an incredible time right now. And I'm seeing some amazing business models that are on one side, consumer plays that are helping candidates or even existing employees with improving their profile, improving their skill set. And then I'm seeing those platforms extend into what would normally be solved by a bespoke sort of HR tech solution. This is really interesting. It's going to have a lot of implications in the talent acquisition and job ad and media space, a lot of implications with new emerging brands there, as well as potential new models in the incumbent platform that the incumbent platforms will take advantage of, new forms of revenue. And for buyers, this is going to be just some new choices to make to manage what has been big line items in their budgets around advertising, around learning, etc. Okay, so post-hire will continue to thrive. There are a number of plays in the space right now that are focused on things like time to productivity, more modern performance management solutions. Learning, especially in the front line, is going to get turned up on its head yet again. This is not about having a better LMS or just about having a better user experience, but content on the fly across an enterprise, content out into the field for your front line, leveraging AI, and it just gets easier and easier to both provide a library of content and let your enterprise create content. I feel for the chief learning officer because it seems like every 2 years with every consumer trend, everything they're doing gets turned upside down, but it's going to happen again. It's happening right now. And again, expand your definition of pay. It's not just about payroll, although that's the biggest part of it in our space, but we're starting to look at, we used to have sort of pay and benefits, and then we had financial wellness, and now we're able to integrate tools that, think about what earned wage access has done for a big segments of the market. Now think about helping with, budgeting and paying bills and integrating into other forms of payment for employees. I think we're going to see a lot of interesting moves here this year. There are a lot of interesting things happening in the space right now. One of the biggest things that I'm really starting to see is that when it comes to AI adoption, we sort of have this hype cycle, this narrative that everybody is adopting everything at the same pace. I think that couldn't be further from the truth. The fastest adopter, the quickest adopter of AI in all forms is going to be the SMB. In that environment, when you're adding some of these tools into if you even consider it a tech stack, but into that tech stack, you're adding resources. So the debate about, who's losing a job or who's going away in the SMB is almost irrelevant. If you've got one HR person or half or one recruiter, and you add some of these tools integrated into the platform, from the platform, around the platform, now you've got 1.5 or 2 HR people. Now you've got 1.5 or 2 recruiters. It's additive in the SMB. And this is a place where we're going to see incredible adoption, especially as these platforms, I talked about the Paychex moves earlier, others in this space are going to be providing tools fast and furious through 2025. It's going to get very interesting. I think being able to scale some of the existing tools that have really had to focus on middle and enterprise market into the SMB is a new opportunity via those marketplace plays. So watch for that. And I'll keep reminding you. The enterprise adoption will be fast, ish, if you will. I haven't seen a large enterprise manage change in a way that's fast ever. We will have particular categories or particular segments within the workforce that are adopting tools. Like think about high volume hiring. Boom, that overnight, that's prevalent. But this transformation in HR and in HR functions, I think talking about it in a 12-month time frame is foolish. I think we're looking at still a very fast time frame in comparison, but this is still taking shape, and I think the decision to move in one direction or another has implications around ethics and security and privacy, and jobs, and the internal stakeholders making that decision that just aren't going to get easier in the next 6 months. The middle market is going to be a hybrid. It's going to vary based on whether, are we talking 500 employees or 5,000 employees? And it's never been as important to understand as a buyer your business and where your opportunities to win are. Never been as important as a vendor coming into the space to really focus on where you can add value, in what segment, at what level of scale. Do you have the resources to get to market, and most importantly, support those customers once you have them? And this all adds up to ecosystems winning big. So being a platform alone with great AI capabilities, without a thriving, well-integrated ecosystem, you will not win in that case. And it goes both ways. The smaller point solutions, smaller suites, everybody needs to be picking their winners, what ecosystem, how they're going to manage their ecosystem, what options they're going to provide their customers, how open they're going to be for their customers to sort of take the keys and do integration themselves. And from the other side, which ecosystems are we as point solutions, smaller suites, where can we better support customers, and where can we better, get to market? So those are they're predictions, but I think they're really expectations based on what I'm seeing, and some may happen faster or slower than I think. But that's where I'm at right now, and I'm happy to dig in with anyone who wants to have a conversation or get into a debate. So I'm really at time, which is perfect. But what's coming up next at WorkTech, later this month, you'll all be aware of it, launching the volume 1 of what is becoming WorkTech's market thesis. So recasting the definition of WorkTech, but it's going to be a fairly expansive series that look at how the market is changing, looking at that platform shift that I talked about, looking at these trends, we're going to start with talent acquisition and then move into post-hire with HCM and talent management. So there'll be at least 3 volumes of this for us to get our heads around as the changes are happening, and we'll keep those updated. But we did launch the HR Tech 100 Fund. You can link to that through oneworktech.com or reach out to me if you're interested in learning more about that, if you're an early stage provider or an angel investor. We are continuing to map the market in a very detailed fashion, leveraging a lot of the tools, a lot of the technology that I've been referencing, in order to do so via advisory, both for buyers and for sellers and acquirers and investors. And once again, I'm really excited to be leading what we've reimagined as the investor experience at the HR Tech Conference in Vegas in September of this year. You'll be getting more information about that. It's been rethought, reimagined, a lot of additional content, a lot of better accessibility and opportunity for startups and growth stage companies to get in front of angels, VC investors, investment banks, and a lot of opportunity coming the other way as well for that community. So 45 minutes, fast, furious, a lot of data. Please reach out if you have any questions, George at oneworktech.com. And that's it. Thank you. Thanks for being here.